Good evening, everyone. This is Chrissy from Solstice ATR. You can find me on the web, on Twitter, Instagram, as well as Discord. If you need to reach out to me, you can reach me quickly on Twitter. That's my handle. Or you can DM me if you have Discord. Remember, this is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. And please use at your own discretion. And remember, if you need to copy the material, you'd be more than happy to, as long as you share the disclosure on the website at Solstice ATR. Before we get into the detail, I want to make sure that the unemployment rate and inflation is there. The Friday numbers came in very clean. The market rallied. We have a couple of things we want to look at, which is the canary in the coal mine, is the IWM, which is the ETF fund for the small cap Russell 2000. But let's first start by breaking this down using the S&P 500, the NASDAQ, and the Dow. The S&P 500 is SPX for the large contract, SPY is the ETF, and the ES mini is the /ES. The NASDAQ is the QQQ or $NDX. For the Dow is /YM for the mini contract, or if you like to trade the large one, it's $DJI or DIA for the ETF fund. The most important thing I want to talk about, two things. Divergence, whether you use a MACD, an RSI, a stochastic momentum indicator. And I'm going to use an RSI. You have to have a couple of different technical indicators combined in order to have a successful trade. First of all, what I mean by divergence or directional trades, we want to make sure that the RSI is set up on count of 14. I do have an exponential and simple moving average in the RSI. The ranges are usually between 70 and 30. Us in our group, we use 80-20 because we want to get a little bit more extension to the upside, a little bit more extension to the downside. Sometimes we get over-exhausted at the top or overextended at the top or bottom, and we want to make sure we don't catch the trend at the wrong time when there is directional trade and non-directional trade. Such as here, when the RSI reached a peak, it eventually came back from the peak, from its mean, back to the mid-center, which is 50 on the RSI, and you can see there's a downtrend. When it's consolidating and range-bound, it's usually hovering around the 50 area, a little higher or below, until we break out of consolidation and we go back higher. On resets, we can draw channels to the downside or draw channels to the upside. You can see that, like if the trend is broken, we take this point to this point and we connect it. It's an uptrend. And if it's connecting to the downside, it's to the downside. So let's first of all break each instrument one by one so you get to see what I'm talking about. And when we are in compression and side action before a breakout, usually we go range bound until we break out. Range bound to an extreme, then we fall back in. Then we go from extreme bottoms to tops. Then we get range bound, then we get another breakout. Let's first of all break this down on a timely fashion. We're going to go daily. We're going to do 6 month. We don't have to go that far. We go 6 month out. Instead of the weekly, we're going to use a daily bar, and we're going to push OK. And the reasons why I had this chart just using the S&P, NASDAQ, and the Dow, I didn't want to include the Russell 2000 because the Russell 2000 represent majority of the small cap companies in the US that keeps the economy running higher or lower. I combined the other large ones together. That way you can see the consolidation, the breakout, and when they get in range, they expand from that range. And as you can see, there was range bound until we broke out of this area in February, looked up, March came back and retested a little bit. We continued higher in April with side action. Then we fell down in May. Then we recovered part of the move. If this employment rate on Friday going to keep the market elevated, or is the market exhausted and going to come back? We're going to trade what the instruments give us, and we don't want to be on either side, and we trade what we see, not what we think. And this is the daily chart on the 3. Let's first of all go to the Russell /RTY or IWM or IWN. As we can see, since February, beginning of February, we've been range bound back and forth. And eventually this month, in May going into June, we created, if this is considered a shoulder, this is the head of it. Is this going to create a shoulder to continue higher or not? We have the weekly fib from here to here. It was range bound on Friday. The Russell stayed inside the Thursday's bar down move, but we are halfway through the fib from high to low. We're at the 50, above the 50%, below the 38. We are above the 61.8 in order to continue higher. Let's take a look at now NASDAQ NQ. As we can see in the NASDAQ, in the last couple of months since December, we looked up, fell back in. This was the annual high in December. And we eventually, this is the date, you can see it. That was the 12/29, 30, 31 was lower. And eventually we broke up, came back, retested the December range. Then eventually we consolidated in the annual in March. Then we looked up, fell back down to the annual high. We double bottomed here. If this is considered a shoulder, this is the head of it, and this is the shoulder, we should continue higher. This is a very large bar on the daily chart on the NASDAQ 100. And if I do go to a 30-day range in the chart, or I do like a 30-day 4-hour, you can see that the range, this is the monthly high and low for May. And we eventually consolidated for 2 weeks. We looked down on Thursday, and eventually we broke out of that linear regression channel, coming up to the upside all morning to the prior week's high from Tuesday. Is this going to continue or not? Keep an open mind that we do hold this number here around the 13,650. So let's take a look at now Dow, and I'll break it down back to the daily chart. As we can see, the Dow has a similar situation. The wave was the high in May here, and the low was here. We're above the 38.2, which we bounced nicely on the monthly bar, and we continued higher. In order to break up, we have to clear the weekly chart high. And if we do fall through the 50 SMA or the 61.8, let's call it 34,500, be careful of it. It may end up to be on the wrong side. And if I do look at it on a daily chart, we'll go back here, time frame. We go daily instead of yearly. We'll do 6 month, and we push OK. You can see the range in the Dow. Let's take a look at now the ES, the E-mini contract, or the SPY, or the SPX. We can see we are in a nice uptrend. We're still holding this channel here. I did these 2 points together, and we're continuing up in a linear regression channel. If I zoom in from April till May, we know the May high and low was here. We almost double bottomed like the NASDAQ, and we eventually continued higher. If this is considered a shoulder, this is the head of it. Is this the cup of it to break up and clear the monthly bar and the weekly bar to the upside or not? Make sure we do hold the 4180 area, 4165 in order to continue higher. If we reset below it, look for the other side of the fence on the daily chart. We can go to the 4-hour 30 days so you can see what I'm talking about. This is the monthly range. It created a W. We've been range bound for the last 2 weeks. And as you can see, it's a nice rounded bottom. Does it create a cup and handle to continue higher? We do not want to see losing the 4,200 area. Let's now take a look at GC, gold. And we'll break down to Bitcoin and oil and all the other instruments. As we can see that the monthly high and low is right here. We consolidated for almost, we created a shoulder, a head, and a shoulder. If you want to consider these two shoulders, that's the head of it. We fell back down on the monthly bar to the 38.2. This happened in the overnight. A lot of people may be sleeping in the US, like such as us in California. You may have not caught the 1855 for a nice bounce. You might have, traded the 61 back to the 50 to the 38.2 fib early morning when the market opens on the gold. If we look at it on a daily chart, we want to make sure that gold never comes back below the 1840 in order to continue higher, and we have to clear the 1908 to get some momentum to the upside in gold. And if you like to see it on the daily, more than happy to show it. Let's go step back, go daily. We do the same thing again. I'm going back and forth between two charts, that way you guys can see the levels between the monthly, and this is the annual, or the weekly linear regression channel, we came out of this discomposition or the linear regression up channel. We were in a downtrend, and eventually we broke up since May, but unfortunately we have not been able. We are making a small reset, has to hold that 38 on the daily and this channel in order to continue higher in GC. Let's take a look at CL. Crude oil, due to the pipe got hacked. They had in the East Coast, they had in the Midwest, they had a little bit of shortage of oil because due to the interruption there, and Biden administration changed the rules on oil and the pipelines, so it caused the price of oil to go higher, from the 55 barrel almost to the $70 range. We're almost up there. This was the annual high from last year, as you can see. Let's just move it. This is my annual high. You can see where I anchored it from January 8th to April 21, 2020. We know that we retested the high here a couple of times in March. We fell down, we stayed in range, then we came back into it, and now we're pushing higher. In order for continuation, we have to keep an eye on the monthly charts, that we hit the 100% of May. We went to the extension of 123 and 138. I usually sometimes draw them backwards. It doesn't make a difference as long as you understand your Fibonacci's. And this is our weekly chart. We had, continuation up. Does this mean we continue, or we can come back, reset at the prior, 2 levels on the month in order to continue higher? Be open mind to change in case 2 things turn the other way around. The price of a barrel or oil in California is basically, when I go to the pump, it's like $70 almost a barrel. But if I go to the pump and I want to get 91 octane, not even 93 like the East Coast, I'm paying almost $4.75 for a gallon of oil. For a gallon of gas. Or if I want to get standard standard gas, which is the 87, 89, they almost between $4.30 and $4.45 a gallon. That is expensive for California. Still on the East Coast, you're still better off than us. You're still in the $2, $2.80 range, max $3. You can see that the prices of oil have increased over time. Let's now go to BTC. Let's take a look at BTC. As we can see, BTC on that daily chart in the last 6 months gapped up. This was the annual high. We gapped up. We never retested this area. We looked up, came back down, continued higher. We have these gaps. When eventually we revisited, we have this gap which we have not filled. We have this gap here which we have not filled. We are in a symmetrical triangle here in a downtrend. What this tells me that Bitcoin still under pressure. Until it clears 42,800, I'm not interested in Bitcoin to the long side. A lot of people, they are pumping it. They do have the convention for the crypto in Miami this week. And we know who they are tailoring the Bitcoin and cryptocurrency to the average consumer out there, giving them hope. We're going to trade what the charts give us, not what we think. Be open mind to change once the direction is given to you. The RSI still in a downtrend. You can draw a channel until that trend is broken. This is when you make a change on buying Bitcoin to the upside. I'm not saying it can still continue down or can still continue back up. We are in a triangle in a downtrend open cone. This is not as easy or hard because you can put it mid-center here through this cone. You're still under that midpoint in BTC. If I'm going to go to a 90-day range, we're going to go intraday instead of daily. We're going to go to a 90-day 4-hour chart to show you what I'm looking at, so you don't end up being biased or beat me up on Twitter. I'm trying to give you information to help you out. Use Fibonacci's, use RSI, momentum indicator, to keep you in line in the direction of the move. We can see since that area, the 61.8 on the annual chart extension from the annual high, we have not been able to get to it, and we have not been able to clear the 38.2 fib extension on the annual chart. We are range in the 23% fib extension from the annual chart, which is the 123. If I zoom in here, we're being range bound going back and forth until this resolves either to break above this area to continue to the 42.8 and clear the 116 simple moving average in order to get a runner. If this falls through this range and falls through the prior week low, the extensions are to the opposite side, like you can do, the 0 line, the 23, the 38, the 50, the 161, and so on. It's the same thing from 0 to 23, 38, 61 to the upside. Until we resolve out as a symmetrical triangle, don't be biased. Trade on the short time frame direction until we resolve out. Let's take a look at Ethereum /ETH. As we can see, Ethereum is in a similar situation. Last month's high was up here and the low was here. We are range bound in an uptrend, but we still, because these are three tops, I consider them. This is a higher high, lower high from that one, and here is a lower high from this. If I zoom in a little bit more closely, you can see it, but I did not put a channel here because I don't want to scare. Until we clear that 2,950, 3,000, this is when Ethereum can get some love into it. If we are in this linear regression channel and I put a center line through here, we have not been able to break the 28-25 area to continue higher. So you're going to trade what you see in that small range until we resolve either side, because we are in consolidation until we are proven wrong. Let's take a look at now some ETFs. I want to go over the IEF. This is the ETF fund. I'm sorry, IEF. This is the ETF fund for the bond market, short maturity, 10-year, 7 to 10-year notes. If the interest rate's going to stay low, the par value of that bond will increase higher, then we'll see a spike in the price of that bond, and eventually interest rates will stay lower, the market will be more bullish. If interest rates spike up, the par value of this bond will fall lower because it's paying more of a high. We've been range bound since March on these bonds, and you can see the range between the low and high. We've been range bound, but we are still holding the 38.2. For me, this is bullish term for the bond market, so the interest rates would be still low because the Federal Reserve Board has not increased it. They need to support the economy. They will be buying back some bonds from corporations, to get some cash flow out of there and to pay back their debt. So this is the IEF. Let's take a look at now XLK, which is the electronically traded fund for the technology, part of the NASDAQ. And you can see that the technology, you can see that it's similar to the NASDAQ. It's created a, if you consider this is the head, this is the shoulder, not a W. It's similar, and creating another shoulder here. If we break this area here on the monthly chart from the prior, this shoulder, which is a little higher here a little lower, and we push higher, we can continue to the upside. If we fall back, keep an eye on the 139 area and XLK. Let's take a look at XLV. XLV is the healthcare sector, and I want you to keep an eye on BIIB. On June 7th, there's going to be an announcement regarding not hepatitis, going to be Alzheimer, and it may be very well if the earning comes out if the FDA approves the product. I'm not sure how much you can use medication to help to slow down that Alzheimer disease. If it is approved in things, BIIB will be around the $400 range, $380 or the $220 if it's not approved. This is why I'm using an XLF to give you an idea what to look for, or IBB, which is the ETF funds for the biotech sector. So that's XLV. If I look at IBB, this is the electronic iShare NASDAQ Biotech. Keep an eye on it if you don't want to participate in biotech. This is the pool of them. If there's a nice approval, you'll see a spike to up here, or you'll see a spike to the other side in BIIB. There it is, BIIB. I'm going to put it up in between. I announced it a little early before I'm going through the stocks, but you can see here that push up, reset down, and we're looking to go back up. And if that news comes out, great. on the 7th, that would be good news for BIIB, Biogen. Let's look at XLF. You can see that the XLF sector in the financial world, you can look at Goldman Sachs, BlackRock, the banks and everything, since they are getting help from the government, the banking sector is doing well. XLE. You can see as well that's the energy sector has done very well. It's got a rounded bottom. This is the cup of it. Does it create another rounded bottom? Let's take a look at one more, J and K. And you can see J and K is range bound, trying to get out of its own way. Last but not least, in the ETFs, NYA, this represents the overall New York Stock Exchange instead of just the NASDAQ 100 or the S&P 500 or the Dow 30. This represents majority of the stocks on the exchange, and we can see on a daily and a monthly chart or a 4-hour chart, 60-day, 90-day, we can see that we are still in a nice uptrend. We had a double bottom. We're trying to break out from the annual high on the monthly chart and the 38.2 fib extension from the annual chart low. Keep an eye on that. That will give you a better idea where we can go. And last but not least, let's take a look at AAPL. I'll go through these very fast. You can see that the range, we're going to go 30 days so we can go a little bit more faster and cleaner for the charting. 30 days, we can see that the range, we fell down, we're consolidating. Apple's trying to come out of this wedge to the upside. Keep an open mind until it clears, the 128 area. Let's take a look at Amazon. Amazon is not as good as I like it. It's range bound down the bottom. So let's take a look at GOOGL. I like GOOGL. In the charting, you can see that the monthly fib, we're trying to stay above the monthly, trying to look for the extension to the upside. If it does not hold the 2370 area, be careful of it. Let's take a look at Netflix, NFLX. You can see Netflix, after the earning report the month before, created a W. I would consider this a double bottom. If we can clear those three tops here, and Netflix can clear this linear regression down channel in an uptrend and goes up and clears the 61, I would look for the prior high here and eventually the extension up here. If it falls through this midpoint and there's a linear regression, it can come back to the backside of this one and backside of this. So that's why you trade what you see, not what you think. Let's take a look at Tesla. As you can see, Tesla has been range bound to the downside. It looked up a couple of days and eventually fell down. This is on the news because of China, that the production and the stuff inventory is not getting ordered the same way, only 50%, and on Friday it had a spike up. You can draw a downtrend here. It's trying to retest the 18 and the 50 and the 116. If it clears it, looks up. If it falls down, you look for the backside of the monthly fib. And let's do one more before we go. What I want to do is go to the ES. And what I want to do is break the monkey bars for you a little bit more in detail so you can understand what I'm looking for. We go from standard, we can use monkey bar or volume profile. Here I have 3 days, 30 minutes. Usually this is the POC where most contracts are. This is the value area high, value area low. We had two distributions on Thursday, one here, one here. We opened here, we closed here. This the triangle is the opening. The rectangle is the opening, the triangle is the close, and the POC and the time spent were almost identical here. If I draw a fib from here to here, and my 50s here, the sentiment is higher. As we can see here, the time spent in the overnight was more spent down here, but we have three distributions. You can see 1, 2, and that's 3. If you consider this as 1 and you consider this as 2, the most important thing, we do hold the 4206 and the 4196, very important in the S&P 500 that we don't lose that little gap in order to continue higher. And the POC was here because we spent a lot of contracts here, and the close was up here around the 2775. So this is our opening. We pushed higher because of the earning reports, and the unemployment rates came in very positive. If this is going to continue, we have to be open mind to change. And if I draw my fib from here to here, I know my midpoint is here. The sentiment is lower because the time spent lower, but that does not mean that this condition has to be met. we have to look at the RSI, supply and demand, moving averages, and a momentum indicator or a DMI in order to help you out in those moves. So let's go back to the regular chart. And what I want you to understand is two things. If I go to a daily candle, let's go 1 year daily. And the reason behind this, I'm going to use the SPY instead of the ES SPY. So you can see where the gaps are. Oops. SPY. Come on. SPY. Okay. As we can see, when we pushed up in August to here, we created a W in September. This was the report of the COVID-19 vaccinations coming out. We had a push up, we consolidated, and we eventually broke up. And you can see the January low here. Where was it? Here. That's a January low, I believe. Yeah. No, this is the low. January 1st. This is very important area and the consolidation of these 3 points. And we kept consolidating. February, we had the little put. This is the January. Then this is the March low. Then we eventually consolidated and pushed higher. We are range bound. Every time you look at the RSI, when it's at a peak, it comes back from its mean. When it goes to the bottom, it comes back to the upside. So you have to be open mind to change in the trend. If you're looking at an RSI, you can draw a trend from this point to this point to this point to see the trend is in an uptrend. When we fall back down, the RSI, the peak of it to the other peak, it's in a downtrend until it's broken. Then eventually it reverses the other way. And you can draw point A to point B. Then you can have an uptrend in that direction. You can see this gap here. You have an uptrend here. Is this going to continue and break up? That would be great to see if we're going to clear the annual high from January till now in order to continue higher. So be open mind to trend direction. Use such as 50 simple moving average in a 20 or an 18 and look for gaps where they are in relationship to trend up or down. I hope this was helpful. I look forward to seeing you next week on Discord, on Twitter, or Instagram. Be safe. Take care. Before I do, I said something, take care, and I didn't give you the last 4 charts that I did. Let's do that one more time before I say goodbye. As you can see here, I used the NYA in relationship to the 1983 area, 2004, 2010. You can see the levels of the SPY resets and the drawdowns between 5 to 13% and an average of 9%, 10%. So this is the rate of change. When the rate of change get too extended, similar to an RSI, it's a 14 count. You can see the peaks of it. We had a small reset, and we had a good rally back up from 83, 84, all the way going till 1987. So let's take a look at now a value line geometric index. And you can see I put the drawdowns from 83 through 2010, 2004. You can see the maximum drawdowns, which are very high, and they can range between 8 in 1 year, and we can have a very minimum 6% average rate of return, medium return in the overall markets. And this is why I use the weekly 5-year value line geometric. Geometric doesn't go as far as the NYA going back to the 1970s. This is why I use this one in relationship to the NYA. And the last but not least, you can see the SPX. I put those levels, which the drawdowns can be 11% average, 5.1% average drawdown, and a 6.3 average draw up. And you can see where the levels can be if we're going to continue higher in the next couple of months, or we're going to fall back to retrace part of the moves higher. This was the January low. This is the vaccination. This is the September high, and we eventually consolidated, broke out. This is the March low, and we are range bound. You can see when the rate of return goes higher, then we fall from the rate of change back down to the midpoint. Then we could either consolidate, try to grind it out until we get another move to the upside. And you can draw channels using short-term and long-term in order to help you out. I hope this was helpful. I look forward to seeing you once again. I did say it earlier. Be safe, and over and out.